Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of one of the most common questions tax attorneys receive on issues involving taxes. How far back can the IRS audit you? Essentially, how long does the IRS have to chase you down and try to get some money from you? Okay, we're just going to go through the basics. It can get super complicated depending on which statute it is, what's considered when the IRS knew, should have known, could have known, etc., etc. We have lots of resources available, articles on this, but let's just go through the basics. How far back can the IRS audit you? General rule is 3 years. Okay, generally the IRS has 3 years to audit you. You file your tax return. In 2 years, the IRS tries to audit you on that return. They can do that. 5 years later, they come back and try to audit you on that return. The statute may have expired, so it's very important that you know that at the time that you get hit with audit, if the statute's expired, because the IRS doesn't care sometimes. They send out notices for things they can't do. Other times it can be 6 years, much less of a chance for them to be able to do it, but there are some situations in which they can. Two of the most common situations is one, if there's substantial underpayment, you didn't include a bunch of income in your return, or you over-embellished your deductions to the degree that it significantly artificially reduced your tax consequence, or two, under 6501E1, if there's a situation in which, and this came as a result of FATCA and Internal Revenue Code section 6038D, but if a taxpayer has more than $5,000 of income generated from foreign assets, certain foreign assets, not all of them, then that will extend the statute of limitations to 6 years. In addition, there are some situations in which there's an unlimited statute of limitations. Most common would be if you don't file. And here's a very common misconception. Let's say your tax return is due May 17th, 2021 for year 2020. It's 2026 and you never filed, so you're like, cool, they never found me, so this is over. That's not true. The only way that the statute kicks in is if you file. So if you don't file, the statute never kicks in, and theoretically, the IRS could come after you forever. Okay. In addition, civil tax fraud. Now, with civil tax fraud, the idea is that the IRS truly hates fraud, and they're not going to limit themselves to 3 or 6 years. There are some, court cases saying, well, things like, hey, yeah, it's unlimited statute, but it's from when you could have or should have known, so you don't just get forever to do it. But as a taxpayer, what's important to keep in mind is if you've committed civil tax fraud and you did a really good job so that the IRS doesn't fine you till 30 years down the line, but they couldn't have, you covered your tracks so well that they couldn't have found you until 30 years. Chances are the courts are going to agree with the IRS and say that, it's an unlimited statute and they're not limited to 3 years or 6 years. A couple of things to keep in mind when it comes to how far back the IRS can audit you, okay? For a lot of people, when it's out of sight, out of mind, they don't think about it. But if you don't file returns especially, or you don't respond to audit notices, the IRS can start issuing you notices and collection notices, and then you have this tax debt or this tax liability, right? And over time, it may become 1 year, 2 years, multiple years. The amount of tax and interest due can just start generating, and next thing you know, you're owing a significant tax debt. This could lead to what's called a passport revocation, which is a big deal in our neck of the woods, in which we focus on international tax because people need their passport to travel, especially if the U.S. passport is the only one you have. And so it's super important. A lot of people, they don't file, and then they could have filed, even if they make significant income. If they have the foreign earned income exclusion and they have the foreign tax credit, their tax liability may be nil, but it's important to keep in mind that not responding to notices and that it can be bad, and that the IRS can have a significant amount of time to come after you, especially if you didn't file. If you miss a return or two, it's normally not a big deal. It doesn't become some criminal where the IRS or the special agents are banging down your door. But if you have a history of filing and then you stop filing, depending on the amount you earn, if any substituted returns were filed on your behalf by the IRS, that sounds better in the brochure than it really is, because your tax liability is normally much less than it would have been in the SFR. But after a significant time has passed for you filing and many returns haven't been filed, it could lead to a criminal situation. And another thing to keep in mind is after the audit is done, or once the taxes are assessed and you haven't responded, you never got the audit notice, or you just thought it was out of sight, out of mind, the IRS can still come after you for things like liens, levies, and seizures of property and assets, okay? Most common is the levy. They just reach into your bank account and try to grab out the money that they think is due. If you're out of compliance for prior years and you want to get into compliance, there's various programs available to you. There's the voluntary disclosure program, there are the streamlined programs, there's delinquency, and there's reasonable cause. We have tons of free information available on our websites. Main one is goldinglawyers.com. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.